Okay, welcome and good evening, everyone. This is the Anderson Report. I am Tim, the Source Anderson. This is my YouTube channel, The Anderson Report. I sincerely want to thank everyone for watching. If you haven't subscribed yet, you can hit the subscribe button on your YouTube page. And if you want notifications on when the next broadcast will be, just hit that little bell that's right next to the subscribe button, and you'll get notifications sent to you however you want them sent, usually by email. I'm also on Periscope. My Periscope is TJ Anderson 12, and my Twitter handle is TJ Anderson 1. So today is Tuesday, August 4th. It's the second day of a new month. Uh, the market had a really kind of an unchanged day for most of the day. The Nasdaq and the S&P were toggling back and forth between fractional gains and fractional losses. The Dow was slightly green most of the day. Got weak a little bit after 2 o'clock, and actually from 2:40, most of the gains for the Dow happened in the last 90 minutes of the day. Hi, Pablo. Most of the gains for the Dow happened really in the last 40 minutes of the day, when the Dow went from just up maybe 30 to 40 points to where it closed, with a gain of, let's call it, two-thirds of 1%, up 160 points, 26,828. Um, so that still is not quite above as high as it was in early June, but you've you had the Dow outperforming now for um, a few days over the last week or so. Really, actually, just today it had overperformed a little bit early last week. So the S&P and Nasdaq both gained, let's say, a third of a percent. The S&P was able to close above the 3,300 level. It closed at 3,306. It's 80 points, a little bit less than 3% from an all-time high, and that was 3386 from February 19th. Now the Nasdaq was really that last uh, uh, hour and a half, or really from 2:40 on, where we got a very nice lift pretty much across the board. The Nasdaq went from down a little bit to up a little bit. It had a gain of about 40 points. That's about a third of a percent. Closed at 10,941. Um, and the Russell outperformed a little bit, and actually a very positive day for the Russell 2000. That's the much more broader cap, small cap index of all the stocks on a capitalization weighted basis that Russell Investment Services follow, that rank from number 1,000 in market cap to number 3,000. It's a small cap benchmark. The most comparable thing to it that S&P has is the S&P 600 small cap average. The Russell 2000 was up 7/10 of a percent. It closed at 1517, and that's 2 days in a row closing above 1500. It's been holding that 200-day moving average now for 3 weeks. If we'd like to see the Russell, of course, take out what was its early June high of, let's call it, I think it was around 1535. Um, so I think that um, for most of the day, the Nasdaq was underperforming just a touch. Tech has obviously had a very, very, very strong move. It was up a combination of Friday and yesterday. It was up 3%. I do think you have some new money at the beginning of the month that is fueling the push in the market that we saw today. late in the day and some of the buying that we saw yesterday. So, what do I mean by new money? Well, anybody that has a owns a mutual fund or that has a 401k or that maybe even just has an investment fund or has some other type of a retirement vehicle or investment vehicle, and let's just say a mutual fund, since that's most people know what mutual funds are. Mutual funds own stocks, and many stocks pay dividends. So you are most likely asked at some point in time by your mutual fund administrator, do you want to reinvest if you have the ABC mutual fund, all the companies in it pay a dividend. You are asked if you want to reinvest those dividends. You're probably asked a similar question in your 401k. You're probably asked a similar question in just about any investment vehicle you have, where either there's companies in there that pay dividends, or any type of other periodic quarterly payout. So if you want to reinvest those dividends, typically what will happen is if the dividends were paid during the month, that money will get reinvested many times at the beginning of the month. There are also many investment and savings programs where people just periodically, almost like on an auto pay type function with their credit card or with their monthly utility bills, people can check a box to say, yes, reinvest my dividends. If you don't reinvest your dividends, then you would most likely get a check at periodically, either at the end of a month or at the end of the quarter, for those companies that in your investment vehicle that pay dividends. So a lot of times what happens is that money gets invested at the beginning of the next month. There are also investment programs that are just periodically, people invest the same amount of money every month at the beginning of the month so that they're not to smooth out their investments over the year. So they're not investing just 3 or 4 times during the year. And maybe that happens to be when the market's at a high, and then you end up with disadvantageous average prices on your stocks or your investment vehicles. So that's what they call kind of, if you ever hear the comment, well, there's a lot of new money being put to work at the beginning of the month. It either comes from a dividend reinvestment program, from other periodic investment programs, or from any other distributions that investment vehicles either at the individual or the institutional side may make, so that that money goes into gets spread among the stocks that you are already held by that investment vehicle or already owned by that mutual fund. So that's why very typically the first couple days of the month, unless we're in a severe downturn, are the market at least has a decent bid to it, and most likely has somewhat of a bias to the upside. Now, I think that a good chunk of Monday's rally was also a follow through from what we had on Friday. And after the very strong opening and stocks held their gains through midday, it was very likely that the NASDAQ was going to close at an all time high. That caused a very positive attitude across investors. And where that didn't really follow through to the opening today, you had this very nice push for stocks higher in the last 90 minutes of the day today. We used to call that the last hour indicator, because if institutional portfolio managers have, let's say they have 12 or one, let's say one portfolio has 12 or 15 stocks that he wants to buy. He's periodically in touch with his trading desk. He may be in meetings during the day. and he may say, okay, well, how much have we bought of A, B, C, and D? He'll get feedback from the trading desks, and maybe at 2 o'clock, 2:30, if he hasn't bought nearly as much stock as he'd like to, and he still has what he thought would be a lot of cash still to invest before the end of the day to get to where he wants to be by the end of the day, he'll tell the desk, look, I got to speed this up. I want to buy at least another X amount by the end of the day. And then they'll accelerate what they're buying in the last hour, hour and a half. He may be one of a couple dozen portfolio managers in that same position. And we call that the last hour indicator because a lot of times, if the market is strong during the last hour, it's a positive sign that portfolio managers are net buyers, and with 90 minutes or an hour to go, they realize they're a little bit behind on what they'd like to buy for the day, and there's not just one of them, and so they accelerate. They get more aggressive and they accelerate their buy activity toward the last 90 minutes or toward the last hour. I think we see. Okay, so that's kind of what the averages did today. A positive day, but almost all of it in the last 90 minutes of the day. Now, the breadth of the market was certainly positive also. At the NYSE, the advanced declines were positive by 2-1. That's a little bit better than what you typically see for an S&P 500 that's only up 0.33%. Particularly in an environment where a lot of that has been driven by the very high cap growth stocks that are at the top of the list of the S&P 500. Yes, I did hear, shucks, I did hear about the news in Beirut. I think they feel that it obviously was some type of an explosive device. I don't know that any group has taken credit for it yet or who might be involved. I'm sure there's a relatively short list of actors in that part of the country that are potentially responsible for that, but we'll have to see. Okay, so the advanced declines were positive. At the end, NASDAQ, they were positive by 3-2. 52-week highs. We had a few less. We had 130 yesterday on the New York Stock Exchange. We had 101 today. We had a 230 on NASDAQ. We had 207 today. I will say also that crude oil had a very nice day today. Energy was one of the worst performing sectors of the S&P universe last week. It acted well today. It was up a little bit yesterday. It was up 1.3% today. It got up to 41.50. If it continues to rally, you got to watch that 42 level very quickly because that's the level that it did not get through when it had its big push a couple of weeks ago. Okay. A lot more energy companies have reported earnings. I think BP reported early this week. Might have been yesterday, might have been this morning. Their revenues very similar to what we've seen from Chevron, from Royal Dutch, from some of the other big international oil companies. I think BP's revenues were down between 55 and 60%. There was also another big major oil company that did cut, and I can't remember the name of it, but it was not Exxon or Chevron. They did report earnings. They did cut their dividend, and the stock did rally. So some investors would feel that a company cutting their dividend was doing the responsible thing and not doing a cash drain, or maybe there was some fear they might eliminate their dividend completely. I really apologize. I can't remember what company that was. I tried to look it up for about 45 minutes after the close. I just couldn't find it, but I know I heard it earlier in the day. So the strongest performing sectors today, energy up 2.5%. I think that's a very positive sign. It's certainly going to help the S&P 500. It's certainly a positive sign for how investors feel about the global economy. Consumer staples up 1.4%. Real estate up 1.4%. There are a couple of positive comments from some big monstrous REIT companies today. Materials up 1.3%. They have acted very well from time to time over the last 3 to 4 weeks, although they had a down week last week. It's nice to see the material sector kick in a little bit, um, as they have always been a cyclical, early cyclical indicator. We did have June factory orders earlier today. This is one of those pieces of economic data that comes out with a full month lag. It was June factory orders, not July, plus 6.2%, a nice bump over May. I'm sorry, a little bit of a decline from May, which was up 7.7%. Now, this is a sequential number month over month. So May's 7.7% increase was probably off an awful number for April. Um, and but a little bit less, and I think also, but a little bit less than May, but better than expected. Consensus was for plus 5%. That number came out at 10 o'clock. I didn't see the market have a big reaction to it in the 10 or 15 minutes following that number, but it's a nice number. Now, gold probably stole the headlines today, or would have stole the headlines if the NASDAQ was not making a new high for the second day in a row. Gold was strong out of the chute. It just grinded higher all day long. Depending on whether you were looking at cash gold or the COMEX gold contract that stopped trading maybe around, I'm not sure if it stops trading at 2:30 or 3 o'clock. Let's say gold was up 2%. It had went out about 1990. It closed at 2030, but it never really stops trading. I took a quick look at it 20 minutes ago. It was trading at 2035, 2037. It'll be very interesting to see what gold does overnight. Silver also had a very strong day. Silver had a day about a week and a half ago where it had broken through to the upside. It was up very strong in the morning. It traded at 26. It reversed, went down to 24. It went down to like just above 23. Traded in the range of like 26 to 23. Crazy range on the day. Settled around 24. I think a lot of people had thought, well, that was it for silver. It had its big move. Now it's just going to sit here for a long time, maybe drift a little lower and test 20 on the downside. That has not happened. It may have tested 23 and a half a couple of times. It was up over 6% today. At 4 o'clock, it was above 26 at 26.10, 26.15. And so silver, a very positive day again with gold. It'll be very interesting to see what silver does overnight. A lot of comments in the financial media earlier on gold. Look, gold has had 2 or 3 big rallies over the last 30 years. One about 5 years or so after we came off the gold standard, gold made its big push in the late 80s after we had the second oil embargo crisis and a huge wave of inflation. Gold is acting a lot differently in this cycle than it was 1979, 1980, or even 2010, 2011, when it got up to 1900 before it retraced all the way to and then traded between like 1150 and 1350 for five or 6 years. John, we're kind of in a new paradigm shift, is that gold is acting a lot differently than Gold in the late 70s and early 80s, gold was viewed as an inflation hedge, and as a total flight to safety. We had a bear market in 79. I'm not going to do the specifics. We had the first oil price shock in 74, and then we had a second round of it in 79ish that extended into 80. It caused a not insignificant recession. Oil was the price of gasoline and the price of heating oil was a much larger percentage of everybody's personal expenses than it is today. Okay. So when you had gasoline prices shoot up like they did initially in 1974 and then again in 1979, it was coincident with a big wave of inflation. And gold was thought to be an inflation hedge. And it was an inflation hedge. Okay. Then gold sold off quite a bit in the early to mid, more like into the mid 80s, 85, 86, when I believe gold traded back down from it. It hit 800 in late 79, early 80. Then in the mid 80s, it traded all the way back down to 250 to 300. And I believe that when the Soviet Union was basically broke and or going broke, they were massive sellers of gold in the world market. And that put a big cap on gold for quite a while. Then, when we had the stock market crash in 87, another mini crash in 89, gold got hit. Gold took a bounce higher. It rallied at a couple times during the 90s when we had a little bit of an uptick in inflation at one point in time. But the big move in gold again was a little bit during the when the internet bubble caused a very sharp sell-off in the stock market and actually a 2.5-year bear market. And then also following the global financial crisis in 08, 09, gold started to do better, started to creep higher, acted pretty well 2010. And then in 2011, when we had a huge impasse on raising the debt ceiling, and one of the credit agencies actually downgraded U.S. government debt from AAA to either AAA minus or double B plus for 3 or 4 months. That's when gold made its high. What was its high until just a few weeks ago, just below 1900. Okay, that's at the same period of time when silver got up into the mid to high 40s. Although I think silver peaked in April, May, June of 11, and gold peaked really in August, September. I'm not really sure why that difference. But at that point in time, you had the crisis in the EU over the potential Greek debt default. You had very high interest rates in the southern flank of the EU through Italy, Spain, Portugal, etc., before Mario Draghi did his famous whatever it takes to save the euro speech, and they started buying sovereign debt throughout the continent. Then when rates went down significantly after that, that crushed the rally in gold. Silver was already kind of on its way down a little bit. So gold right now is certainly not an inflation hedge because there's no inflation anywhere in sight. I think that gold is trading inversely to the dollar, although it's interesting that gold was up 2 to 2.5% today, depending on when you consider the end of the day to be. Certainly for the stock market, the end of the day is 4 o'clock, but I think the gold futures, even though the gold futures stopped trading at the COMEX at, I think, 3 o'clock, they still trade on Globex. So gold's not really an inflation hedge right now. I think that, and the reason that gold, I think the reason that gold got very little juice behind it 3 or 4 years ago, when you had some turmoil over the raising the debt ceiling a couple of times, is that, and people were concerned maybe about inflation when bond rates got up just a touch above 3%, is that you had this Bitcoin phenomena going on. And a lot of people thought that Bitcoin was going to just replace gold as a flight to safety and as a place for people to go to if they were concerned about turmoil around the globe, and or a currency flight to zero in an effort to for countries to juice their economies and their stock markets. Now, the issue with Bitcoin, obviously, is that it's not regulated. There's not enough critical mass to it. Uh, and it's a, um, let's call it it's some, it's a vehicle. I don't even know if I can call it a currency. It's a vehicle that is a favorite of basically the criminal element, because there's no way to trace it. And even though people will say the Bitcoin fans or fanatics, and some of them are fanatics, will say, "Oh, Bitcoin is the next big thing. It's so great that the Fed's not involved, et cetera, et cetera, et cetera, et cetera," until it has more regulation. People can talk about how the blockchain, you can't hack the blockchain till they're blue in the face. Eventually, somebody could hack the blockchain. Okay. So Bitcoin got up very close to 20,000 a few years ago, pulled back, went all the way back to 3 or 4,000. And now it had a move to 5,000, then 10,000. Now it's hovering around 11 or 12,000 until it reaches enough critical mass and gets some um, uh, regulatory framework around it. It's just not going to go mainstream. So I think that where years ago Bitcoin would be getting a lot of this attention that gold's getting now, people realize that, okay, gold is the is a hedge against potential explosion of government debt around the globe and a potential crisis or turmoil in the central banking system. Okay. But notice gold has been today up 2.5% has been one of the sharper increases we've had on a daily basis. I also think it's very bullish for gold today that it went through 2000 and really didn't on the first attempt. I mean, now, yes, it's been hovering in that 1960, 1970 area for a while, but it didn't get to 205, fail, trade back to 1950 2 or 3 times like you might think it a currency or a tradable event would if it's getting to a big number that's a big psychological, what we call a big round number threshold. $2,000 an ounce for gold has never been there before, and it went through it on the first try. Now, let's see if it holds. Let's see if it holds that level. You know, the technical chart people that have done a lot of real serious work on it think that the target zone is 2,200 to 2,300 for gold. But I think that if it's going there, it's more likely to be a grind and not a sharp parabolic explosion to that level. Okay, I didn't mean to do a big long thing on Bitcoin, and I hate to get the crypto people crazy, because they do get crazy on occasion. But that's my wrap on gold and Bitcoin. Gold, it feels like it's going higher. There's no reason to fight it right now. Where are we going next with this? So, look, we're going to get ADP employment jobs numbers tomorrow. We're going to get the next 3 days are critical for the market. Three big numbers on the employment picture, the most stubborn part of the economy to get cranked up to the next level. The projections for Friday's job numbers are for the unemployment rate to go to 10.5%, down from where it was last month at 11.1%, and for an add of 1.8 million to 2 million non-farm payroll jobs in the month of July. I got to be honest with you. I'll be impressed if we see both those numbers. The weekly numbers have not been that positive. I know we can have added jobs even with weekly claims plateauing, but we're going to get ADP numbers tomorrow. That'll be for the private sector. ADP numbers have been pretty good, and because of who ADP is, they have real hard data right out of the chute, and it will be a private sector number. Now, where else are we going to go here? I'm just looking to see what the questions might be. Yeah, the cryptos are just not mainstream. They're not mainstream enough yet. And they're just too popular with the criminal element. As we saw with the Twitter hack 2 weeks ago. And if you're going to buy real Bitcoin and not a tradable Bitcoin ETF, which there are a few of, I don't even know the symbols right now. You've got to set up your wallet really correctly, and you've got to write down the username and password for that somewhere, at least a couple places where you're not going to lose it, because you will never be able to retrieve your username and password if you forget what it was. And then there will be Bitcoin in your Bitcoin wallet, and you won't be able to access it. Yeah, you're right, Pablo. Spot on. Okay, so we went over a bunch of stocks that were making new 52-week highs in the NYSE. One of the NASDAQ stocks that jumped out at me that's made it to a 52-week high, and there were 230 of them yesterday, 207 of them today, was Expeditors International. It is a shipping company, trucker. It is in the Dow Jones Transportation Average. Because the Dow Jones Transportation Average has a lot of airlines in it and a lot of rails in it, it's lagged the rally, but it has gotten above the 10,000 level the last few days, showing some signs of life. And frankly, it jumped off the page at me that Expeditors International is trading at a 52-week high. Truckers are typically thought to be what you call early cyclical stocks, signs that the economy, an early sign that the economic cycle is improving, and that the data that we're about to see over the next few months is going to be more positive. Because as the truck volume increases, that means people are ordering things for stores, for raw material parts to make product with, or anything else you can possibly imagine. It's not just UPS and Federal Express delivering packages that people have ordered on Amazon or another online shopping service. This is real manufacturing and retail businesses ordering either raw materials, products, or components. Okay, some other all-time highs in NASDAQ, just because I said I was going to highlight a few of them. We know that Apple's made a couple of all-time highs. Electronic Arts, obviously a big game player. Etsy, that's your kind of your online, what would you call it? Your online hobby destination, maybe. Activision, ATVI, That's online, a little bit of online gaming, streaming. PayPal, that's an online business. Peloton, if you really, I don't know what the upside, what the cap is on the market for $3,500 bikes that come with $80 monthly subscriptions, but Peloton's been a great stock. Um, Monster Beverage, not a big fan, but I guess it's been a hot product. Nvidia, of course, Nvidia makes the guts of a lot of computers that people use for streaming, and for any webcasts and all that. It's an internet traffic trade stock. Nvidia, great company. Overstock, back from the dead. People ordering stuff online. Papa John's, take home delivery pizza. Take Two Entertainment, I think they reported today or yesterday. I don't they make the Grand Theft Auto and a bunch of other games like that. Gaming's been hot with people stuck at home. Stamps.com, people don't want to go to the post office. Boy, that stock was dead for so long. Smith and Wesson, consistent with Sturm Ruger from the NYSE, making a new high. Take Two Entertainment reported earnings this morning. I was told it was a very good number. I am not familiar with the stock. And Disney reported earnings after the close. It's just a tough, it was trading down a little bit. It's just a tough environment for Disney. They got ahead of all the problems they were going to have very early. They eliminated their dividend very early when it was clear the virus was going to be an issue. I mean, look, Disney is all about a lot of fun at crowded places, right? So, it's tough for them. Now, their earnings did beat expectations. I'm sure there's some special items in it. They made 8 cents. They were projected to lose 64 cents for the quarter. I don't think that 8 cents is a clean number. Their revenues were short by 600 million. Their revenues 11 and a quarter billion versus expectations of 12.3 billion. I mean, their parks are either shut down or at minimal capacity. Their theme cruises are not running. ESPN is, until very recently, has been relying on, legacy sports replays or foreign sports. Somebody told me there was Korean baseball on a couple weeks ago before Major League Baseball started back up. So you got to think the revenues at ESPN are really hurting. And Disney's all about large groups. So, and sporting events from ESPN. So, look, they got work to do. It's been a great company. It's been a great story. It'll be interesting to see what the feedback is from their conference call. I don't know if it was going to be tonight or first thing in the morning. Okay. So, look, I don't have a lot else. There's a chance that there might not be a show, a broadcast tomorrow. But on Thursday morning, we'll of course have the weekly jobless claims numbers, and then on Friday we will have the July employment report with the non-farm payroll adds or losses and the unemployment rate. There'll be a number of other metrics that will be important to look at. And the way that works is the survey week was the second full week in July. So it was that week, maybe from the 7th to the 14th. I think the 14th was a Friday. And I think that it was before we had a week where there was a move back, a a move back up from 1.3 to 1.4 million weekly first time claims. Continuing claims were still going down a little bit. The consensus for that is an add of, 1.8 to 2 million jobs. But that's Friday. That's 3 days from now. The market's been good, and NASDAQ an all-time high for the second day today. I just think at any point in time, we could get a 2 to 3 point sell-off that turns into a 3 to 5% sell-off. It's not going to be the end of the world. It's not going to kill the move higher, but we got to get through the next 3 days of data on the jobs front. That's been the toughest part of the economy to get kicked into the next gear. And then we got to get some resolution on this stimulus 4.0 plan. And there will, of course, be some more earnings, but we'll cover those, kind of hit the highlights on those as they come out. So this is the Anderson Report. That is the YouTube channel. The channel is the Anderson Report. If you have not subscribed, please hit the subscribe button. You can also watch it on Periscope, TJ Anderson 12. My Twitter handle is TJ Anderson 1. I'll probably have a couple of comments on the ADP report when it comes out, but I might be a little more quiet than usual during the entire day. I've got a couple things going on I've got to work on. And we will most likely see you back again Thursday evening. And of course, we'll probably do something on Friday after if not shortly after the employment report, then Friday after the close. So everyone, have a nice night, and we will see you in a couple of days.